about this. And whether you supported the rescue plan or not, it's important these dollars get out the door so people aren't evicted. So I ask you to do whatever you can in your states. The money went to state governments and to more large county, large cities within your state. Today, we'll quickly consider the nomination of Damon Smith to serve as General Counsel of HUD. He understands the challenges millions of Americans face. He knows a stable home makes the difference between life and death, not just during a pandemic. He currently serves as Senior Advisor at HUD. He previously served as Senior Counsel, Acting General Counsel at HUD during the Obama-Biden administration. He was a law professor at Rutgers and American U, graduate of Harvard Law School, holds a bachelor's degree in English at the University of Illinois at Champaign-Urbana. He's eminently qualified. I strongly support his nomination and urge others to do the same. Senator Toomey.
I intend to support the nominee, as I think a majority of Republicans are, and I think we're ready to proceed to the vote.
I appreciate that. We'll proceed. I'll move to report favorably the nomination. Those in favor say aye.
Aye.
All opposed say nay. The ayes have it. The nomination is approved. In order reported favorably to the Senate. We will now begin the hearing. Thank you all for your cooperation and showing up on time. We'll hear testimony. The hearing itself now will come to order. We'll hear testimony from the heads of 3 agencies responsible for protecting our financial system, make sure it serves everyone. The National Credit Union Administration, NCUA, the Federal Deposit Insurance Corporation, FDIC, and the Office of the Comptroller of the Currency, the OCC. Because of the work we've done with the rescue plan, putting money in people's pockets and making progress against the pandemic, our economy is starting to recover, adding more jobs every month. For the first time, workers are starting to reclaim a little bit of power in our economy. As we build on this progress, we need to make sure those gains end up in the pockets of working families, the people who made this progress possible. We need to make sure their money is protected. Together, those of you before us today embody the public backing of our banking system. Yet most people, frankly, don't know your agencies even exist, let alone what you do. They see the letters NCUA and FDIC and the signs outside credit unions and banks are emblazoned on the backs of credit cards. They don't think about much what they mean. They shouldn't have to. People are busy working hard to support their families and raise their kids. They're supposed to be able to trust you, their watchdogs, to keep their money safe. When I talk to Ohioans, though, I hear the same message. People don't trust the banks, especially the largest banks. They remember after the Great Recession, when we called it a recovery around here, workers didn't get much of a raise and entire neighborhoods in towns were left behind. They've been burned by exorbitant fees, high minimum balances, segregated second chance accounts. They watch bigger banks buy up the smaller ones and close local branches, making it harder and harder for small businesses and working families to get an affordable small business loan or a mortgage. It's happening in my home state. It's happening across the country in rural communities and black and brown communities and all the communities that Wall Street is trampled on. We know what happens when people don't have a credit union or a bank they trust in their community. They turn to expensive check cashers and shady payday lenders that prey too often on working families. Last week, before our hearing on extending the military's 36% interest rate cap to everyone, I talked to a mother from Lorain, Ohio, who had to take out a payday loan to pay her bills. She ended up trapped in a cycle of debt. We know that story is all too common, where people turn to so-called fintechs that claim to make banking easier and cheaper, but have few protections and put people's money at risk. I urge the CFPB to look into the risks of these kinds of fintechs like Chime after customers were locked out of their accounts and couldn't get access to their own money, putting their ability to buy groceries, pay their bills, make their rent at risk. These issues people may not seem connected, but they all stem from the same big problem. Big banks and corporations have too much unchecked power over our community and over our economy. We need no-fee accounts that allow everyone to open a bank account and have control over their money. We need to close the loopholes that allow so-called fintech firms to play by a different set of rules than banks and credit unions, leading to unfair competition, putting consumers' money at risk. We need strong financial watchdogs that hold financial institutions accountable and ensure these institutions serve their communities and their customers instead of lining their own pockets. For too long, we've had regulators who didn't think standing up to Wall Street was part of their job. They rolled back the rules that industry had spent years begging for. They rewarded themselves and instead of investing in the people whom they were supposed to serve. There are a lot of community-based institutions in my state and in all of your states, like CDFIs and MDIs and small credit unions and community banks. They're the ones making the small business loans. They're the ones working with borrowers when they might miss a mortgage payment because of a sudden medical expense or a lost job. They stepped up to help neighbors during the pandemic. It's your job as the regulators to make sure that all financial institutions from Wall Street to Main Street do the same. Regulators like the FDIC must change their approach to bank mergers. No more rubber stamping every merger, leaving towns in Ohio and across the country with no branches. When mergers do happen, you need to make sure that banks live up to the promises that they made to the community. We should be cracking down on risky shadow banks that use the allure of shiny new financial technology to distract us from the facts that they are just payday lenders with a fancy app. We need stronger capital requirements so that banks and credit unions can continue to lend to and invest in their communities in good times and bad times. We now have new leadership at NCUA with Chair Harper, who's working on a bipartisan basis to strengthen the NCUA and ensure that credit unions serve their members and communities. I applaud Acting Controller Sue for rescinding the misguided changes to the CRA that former Controller Otting rushed through. The legacy of black codes and Jim Crow and redlining still holds back too many communities, and the OCC's rule did not serve CRA's core purpose, to ensure that banks serve low-income communities and communities of color. I'm glad that all three bank regulators, the Fed, the OCC, and the FDIC, are listening to feedback and developing a proposal that will make sure banks serve everyone. Thankfully, President Biden is replacing Trump-era regulators with leaders who understand that their job is to stand up for working Americans, not for Wall Street. We need diverse regulators who know firsthand our financial system hasn't delivered for large portions of the country. The people who oversee our country's economy need to reflect the Americans who make it work, black and brown communities, low-income communities, off other underrepresented communities, and working families from the rural South to the industrial Midwest, not just the wealthiest Washington insiders. Financial regulators do your jobs. Working Americans should be able to trust that government looks out for them. They won't have to worry they'll fall victim to a debt trap or have their bank accounts zeroed out because of unfair overdraft fees. You're all public servants. You're responsible for making sure that this economy and the financial system work for the American people. Look forward to hearing from you today, Senator Jimmy.